I'm just going to go through a tiny trade here. So right now I'm looking at, say, the monthly chart of Canadian dollar. And you see the chart. Um, and you see that, whoa, there, it's down far. So this is the last red candle in this big green jumps, right? After that, there's a distal line, and I see that it's crossed that, and then it's underneath it. And here it's coming from, there's a split here, and there's a split here. It's kind of in the middle of that area. I had thought it was just a split. Oh, AD, that's why. Because, alright, that's not the same trade. Sorry. What I'm looking at right here on Canadian dollars, that this is a lonely pivot on the weekly chart. See this distal line right here? This area where it swoops upwards and comes down and kind of U-shapes it upwards. That on that pivot is that lonely pivot, and those usually hold. If they're going to hold, they actually go straight so close to that pinpoint zone, so you really don't have to risk much. And see the wick today that it tapped that region, and it really doesn't. I mean, that's as close as you can get, especially on a weekly chart, with free space underneath, limited risk, and you can really increase your reward if it wants to go up. So that's why I'm looking for longs. I'm looking to get in long on the smaller time frame now that, I could just buy right now, right? And risk all the way to the lonely pivot. But I see that if there's a way to break out, we can go long. And there's really no time frames that line up for longs that I can see, but I can definitely see that there's too much aggression going upwards at the moment. And that's why it pushed down from here. So it's up. This was all green. This was a hammer candle going upwards, really bullish, and it just got pushed down. Some sellers jumped in. And I had wished that the sellers didn't jump in yet until it got into my supply zone, because I would have taken this short, especially if it continued green like that. That's just too much green, even though that's counter trend, and we all know that because we think it's going up, but it was counter trend going on this short zone, and it got busted. And if it just rallied continuously going up to here, like this 5 minute bar, if this last 5 minute bar didn't print red and it was just another green without any retracement, I would bet my horses on this entire zone, especially at least working for a 0.5 to 1, which is which wouldn't be too difficult. Right now it would be setting up to, right now it's rallying. So this is setting up for a little range. That means we have to cramp our targets closer, and that means we're probably taking a 0.33 to 1 if we want to take this zone. And you can always try to get in, like, say this is the full zone, you can try to get in at 75% of the zone or half of the zone if it wants to rally up there. It just means that you are less likely to be filled on the trade, and uh, and there's a much better risk reward relationship. If you get in at 50%, um, you're now making a 1 to 2 risk reward to get to a 0.5 to 1 on the zone. I mean, it changes it dramatically, and that's always very, very nice. And it's a little trick you can do, like 50% off coupon. Basically, you have 50% less risk. But anyways, that's the deal. And I do think right now if this continues rallying, I'll I'll try to get in probably like right here, like a 75% of the zone, to just alter the risk reward a little bit better, because now that we can't use this blue line as the target because this is making a split, and inside the split there is demand, in my opinion at least. I know that there is no way, so hold on. I'm just going to erase the target for now and just see that, okay, this is the split before free space. Okay, there's demand ahead of that. On this 5 minute, I would imagine that this split, especially if it works, underneath this wick is actually all demand. Oops. Yep. Underneath this wick. So in the shaded region would be eligible buyers in my opinion. So I'm not messing with buyers. I really want to be in and out of the markets with, relatively good risk reward, but also relatively good win rate. So if I were to say this, that there might be better opportunities out there because there's not much gap between supply, which is this is supply, and demand, which is this is demand. Okay, there's not much room to bounce back and forth. But if this thing rallies, like it's just touched the proximal line now, if this one wants to rally into the zone and give me a better deal, give me a little discount, I'll gladly go in with it. Gladly. And the whole zone will be $500 risk. So let's go ahead and look at that. 0.00141, 0.00141, and $500 would be probably like 3 contracts. So we'll take 3 contracts right around here. Right up here for sure, if he wants to do that. So let's take a look at the 60-minute. Like right now, we see that, oh, this thing is rallying into supply. We're ready to go now. We're ready to go. This thing is finally matching us. We really want to get in short, and that's what it would be. So let's get in 3 contracts short right now. 3 contracts short, 6C. However, like I see that we might miss this trade uh, because I'm really looking for it to go a little bit further into the zone. In fact, I really want to see it come into here, that region. But this is I'm really asking price to do exactly what I want, and that doesn't happen all the time. So you got to just read and react. If I see a better, what will happen is if I get in now, price can go all the way up here and enter the zone that I actually want, because this I see there's distal lines right here, these 2 wicks, 1, 2, those 2 wicks are pointing towards this supply, and outside of their wicks is that fresh area supply, without any supply for a long time with free space upwards. So I just picture that is a really nice spot to set my risk because it's against the wall, it's against the wall. So I really have a lot of, I'll put my risk there because it's against the wall. It shouldn't really go much further up unless it's going up further, which I do think it is, but without retracement, so I don't think it's going to happen. It needs retracement. Right now it's a minor retracement. See this wick? This is not a retracement in my head. This was a small retracement, okay, but and that's why it's acting as demand. But it's relatively small. We would think something would be a little bit more major. Um, so let's just keep tabs on that. The 60 minutes, obviously, that picture's probably going to work out, even though, we didn't get in. It was a very high win rate strategy because my risk was so large, and the reward is so tight. But over a series of 100 trades, it might not be worth doing that because the risk reward. And in order for it to be worth it, it really has to get up into my zone before I enter the trade. So not a problem with me missing this trade, but I just wanted to show, and it might not still miss. It might actually keep going upwards. We'll see. But I just wanted to show that this is the lonely pivot right here. That's the lonely pivot, protecting free space underneath. The aggressive entry into here, so the arrival is so strong. I mean, it's very mighty. All currencies are just have dropped like an absolute rock. Um, and yeah, it just so happens that Aussie dollars in there in that demand as well. So it's and we're really charting a dollar decrease here. So because all currencies are really, in my opinion, going up, but this would be obviously counter trend um, to the main trend. In my opinion, the main trend is now going upwards. So we want to get in long is the real trade here, and we can hold overnight, a couple nights even. So we got to be aware of longs, um, and this would be counter trend, right? But I'm just saying you can probably scoop up some money here. That's all. Yeah, this looks very bullish. Actually, right now it looks like it will enter me, so that means it will probably go upwards into the supply that I want to sell at. So that I'm really willing to sell at. So we'll see. Um, we'll see. We'll see how that develops. Yeah. So as it goes, as it goes, as it goes. We'll see. We'll see. Moving on. Um, oh, I wanted to show gold. Gold was a trade that this yellow box right here. There's so what I'm seeing is there's a huge line here. Look at all these wicks. One, two, three, four, five, six huge wicks here on the weekly chart. Um, this is forming a line, and I always look for zones outside of the line, protecting free space, okay, against the wall outside of the line, right? That's what it seems like to me. So it is that. Here's the zone, and then underneath it is I see some type of demand wick. I do see that, but then there's really nothing else until the pivot low, and then this trend line or whatever you want to call whoever wants to trade those. There might be buyers there. They're very very likely to be buyers there. So, but in the between, there's not very many, in my opinion. So, and I see a semi-aggressive arrival because it went up and it hasn't really retraced until even breaking the zone. So it hasn't really retraced, and now it's entered into my demand zone. I do want to show the demand and a smaller level. So this is the daily chart, and you can now see that this is that wick that we were talking about. But if you see that the setup, um, there is a little bit of free space, rally base rally, really isolated by itself and outside of this big, you know, range, distal line, and it broke that and entered into our zone. And now it's about to exit our zone. At least that's what that's where we're betting on. um, it's it's good to see. It really is good to see. But that's highlighted yellow because that's a very important zone. We're very, very happy about this zone. So um, we'll see. It entered the zone and now it's kind of crawling out of it. We'll see if it flips over and becomes aggressive up to the upside. This is a weekly, daily zone, so that means we have to hold overnight. That means, yeah, we'll very likely be holding overnight and moving our stop to the pivot in the zone. Although these things can be tricky, so I do want it to exit the zone and probably come up like to a significant place to where like I obviously now can move my risk upwards. Right now, this is the proximal line, so I'm it's not really exited the proximal line, so I'm not even gonna move my stop. Right now, it's still it's still deciding itself. So that's one trade that I'm in. Natural gas, I don't believe worked. Um, there was this demand zone that was far, far away, very far away. Um, right here, this 240 minute split, and then if you go to the 60-minute chart, this is very old. It went way up there, reaching very high up before reaching here. It's a 60-minute split as well. That means it's probably a 30-minute zone at the very least. Yeah, and here's the zone. We were really happy about this when we found it. And that's the zone, and let's see what happened. And obviously it sliced through it, but rallied and tried to work again, and now it broke, and now it's over. So we should probably record that. NG long. This was a 30-minute holding level, protecting free space, old, outside local distal line. 60-minute split, 240-minute split. The PIS was NA because it broke and it went 0. So that's what happened. This was the highlighted region. We can go ahead and do that. And this was zone. What? Yeah, this was zone 103. Sorry, 103. Yeah, this is how I usually look at it, but you probably can't see on the screen as well as I can. I like the candles fairly skinny. 30-minute, yep. And then 240-minute, you can see that what happened. There you go. Very old, very, very old zone. But it did try to work here. But now we can delete all that. We can delete that as well. Yeah, so let's go ahead and that was the trade. I could say outside regional distal line on that. Outside regional distal line. NQ, so the NASDAQ, this is very highly tradable market. Yeah, we were gonna go long in this box, and so it's very low now. And it reached the end and broke these lows. I'm very long on this, so let's go ahead and try to get in. We see that 240-minute is slicing through a huge range. These are very risky trades now because the range is back and forth. And it can slice you out, and obviously I can't take the full range as my risk, and I could, but I like to get in a way that we can really capitalize on risk reward. Right now it's heading into supply, but that is not necessary. It doesn't mean anything because it's been there so long in that little range. So we gotta zoom out. Let's go to a 120. Still confused. Let's go to a 480. Now it's a little bit better. So you can see that it's in demand. Okay. Now it's coming up to where there was some supply, or was demand, and now it pushed and broke. So now it's supply. What I see is this little elbow here could be supply, because it's protecting a tiny little bit of free space, and then this is a lonely pivot. but not very strong. There needs to be more body instead of wick, so I wouldn't plot that. Going upwards, this is definitely a zone. This is more of a lonely pivot right here. Okay, there you go, up, right up to the zone. So very limited risk and high reward, especially after breaking this low, or sorry, this high. This must be an important high, so it breaks that, and people are like, "Oh, long or something like." But then in between the highs, it's an awesome spot to be. Very awesome spot to be, especially today. That's what I was wondering. See this low right here today? I wanted it to break that during the day because it's 8 o'clock right now, 8 a.m. Market hasn't opened. If it breaks that low, triggering shorts or whatever, people Monday morning sentiment, but it doesn't break the actual low, the very large low that was created in June, that's a good little spot to be, to have a risk reward, 2 to 1 maybe up to here, back up to here. That's a good spot to be in my opinion. I've been there before, especially on low time frames. That works. Let's hop back to the Canadian dollar that we were looking at initially. You see that? Oh my gosh, it happened. Sorry, guys. Oh, yes. Short, 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 short. 1, 2, 3, 4, 5. We are 5 short now. This is exactly what we wanted. I thought we missed the trade. Didn't it show that we missed the trade on the 240 minute? Okay, good. So the 240 minute is a huge decrease right here. So it's really hit buyers, right? And I think the buyers are too aggressive. The buyers have been too aggressive. And we say that, hey, the buyers have been too aggressive. This thing really turned around on the dime. Um, and that, I just think that the buyers are too aggressive. So we've got 10 contracts actually now. Don't know how much risk reward that is. So we gotta pay attention to that. But and that's exactly what we got. Now our target's in near the proximal line of the zone itself. Okay. Um, if you look at the 15-minute chart, this thing is overpriced, and I'm glad we didn't get in where we were thinking about there. We got in way later. Here's where way later, and now we're going to ride down that price. So we're going to ride that puppy down. We got 12 contracts. Our risk would be probably up to here, just because we want to stay in the trade. Um, and that is 0.00106, 0.00106, and we've got 12 contracts, so that we're risking $1,200. We can probably risk 1, 2, 3, so 15 contracts now. We can risk about 2 grand on that trade. Our risk is right here, 73445, 73445. That's a humongo trade out. But it's relatively small risk. Um, it's about a 1 to 1, I'm assuming. The blue line is down here. That's exactly where we want to be. So if this does return, we're probably going to get out with about a 1 to 1. So down to here, 7.3, wait, 7.3250. 7.3250. That's gladly where we'll be. Um, Happy about it. Very happy about it. So let's see what goes on. Ideally, we should probably put our stop right on this line, honestly. But it just looks, in this case, it just looks that it's going to pop that. If it does, we got our risk right here. Um, Hopefully, we'll have our risk far enough away to to return back to this zone. Um, yeah, So this is the target. We can get rid of everything else. So, um, so that's what's going on. That's our trade, and we'll see how it works out. I don't know if I'm gonna make the just video, just chilling, but I'm fine with that. We're risking a lot, but we're happy about it. Nat gas, we're long. Aussie dollar, we're long. HG, we're long. GC, we're long. Um, yeah, we're all long basically going upwards on this, and I'm short on that Canadian dollar, which is hedged against everything else, but that's okay because we're heavy contracts, short counter trend. We don't need to hold it for very long. Um, yeah, that's ideally what's crack-a-lacking. So, but this might take hours to complete. So I guess I'll pause it, and I'm just gonna leave, the market to do what the market does, and my stops are in place. Yes, it's a lot of risk, but yes, I think it's rather high probability, but we will see. And then after that, we'll just go ahead and we'll see the results of this. So let's wait up.